Good afternoon, everyone. Thank you very much for giving us your time. I'm Ren Fernandez. I'm the head of marketing here at Irish Mortgage Corporation, and I'll be the moderator for this webinar. Now, throughout this webinar, there'll be plenty of questions and plenty of things we'll be covering, but just some housekeeping for yourselves. So we will have a Q&A section at the very end of this webinar. And so if you do have any questions, there's a little Q&A tab at the bottom of your screen. If you want to throw the questions that you have, throw them in there, and we'll be able to go through them at the end. And there will also be a poll that'll pop up on screen here, and it'll just give us a better idea of where you guys are in your mortgage journey. And the more we know, the better we can tailor this webinar for you in terms of what topics to cover off and how to, I suppose, convey the information clearly to you. So I'm just going to push that poll out. And while we're doing that, I'm just going to introduce our experts. So Michelle, I'll turn to you first.
Hi, everybody. Thanks a million for joining. So my name is Michelle Maloney. I am Mortgage Sales Manager here at Irish Mortgage Corporation. Irish Mortgage Corporation, we're around 36 years. We are based on Baggot Street in Dublin. However, we look after clients all over the country. My own background is over 20 years in financial services and plenty of experience looking after mortgages.
Lovely, Michelle. Thank you. And Ciaran, over to yourself.
And hi everybody. Thank you for joining. My name is Ciaran Meagher. I work at Jacob Law Solicitors based in Waterford City. We're a relatively new solicitor firm. We're around for the past number of years. I am a team lead in the new bills department at Jacob Law. I manage a full team of case managers as well as my own portfolio as clients on a daily basis as well. And I just wanted to say thank you for IMC for arranging the meeting and everybody for joining as well. It's a great opportunity.
Brilliant. So I'm just going to leave that poll up for a couple of minutes. And for anyone that has just joined, I'll repeat what I said at the start of, if you have any questions whatsoever, please do throw them in the Q&A section and we'll be able to address them at the end. And if we don't get to any questions, don't be afraid. We will get in touch with you just to be able to answer your questions for you. So there won't be any questions left unanswered. And so I suppose as first-time buyers, there's lots of questions. I suppose mortgages can be a little bit scary, and for most people, it is the biggest financial investment of their lives. And so, preparations can be. Well, I suppose what preparations can a first-time buyer make? I suppose there's plenty of things that you need, or plenty of steps that you need to make to be able to move forward. But Michelle, I might turn to you here in terms of just the very start of that mortgage journey. What preparations can a first-time buyer make to, I suppose, have a healthy application?
Yeah. So look, first thing is contact us. Contact us well in advance of when you're planning on buying your house anyway. And that is one of the biggest things that we would say to clients is, reach out to us early. Let us help you put a plan in place to get mortgage ready, okay? A lot of clients come to us, they've gone out, they've picked out their dream home, and then they're coming to us and they want to buy, and maybe they're not prepared at that stage. So look, do contact us early in advance of the process. But really, I suppose what you're looking at with the lenders is the biggest thing, I suppose, is income. A sustainable income, okay? So, they want to make sure that in the foreseeable future that the income that you are earning is sustainable and will be there to make those mortgage repayments going on into the future. Look, things can change in our lives, change jobs and all that kind of stuff. And we know that'll happen over the term of a mortgage. But it is about the sustainability, and I suppose the historic earning ability that you have as well, what you've been earning over the years coming up to your mortgage and stuff like that, okay? So they do look at that to make sure your income is there. The other side of it then is, demonstrating your repayment ability for the mortgage. So what I always say to my clients is, yeah, you need to be doing your saving to build up your deposit and everything like that. You have to have a 10% deposit going ahead for your mortgage. And there is various schemes that we can chat through as well. But as well as building up that 10% deposit with your savings, you're actually proving to the bank that you can actually repay this mortgage into the future, okay? So the exact thing that I say is between maybe rent and savings, okay, to get that to the amount of what your future mortgage repayment is going to be. So if your future mortgage repayment is going to be about 1,500, maybe you're saving 500, you're paying 1,000 rent, okay? keep that going. That needs to be going for at least 6 months prior to an application, okay? It's one of the biggest pieces of criteria that the lenders look at, and it's one of the biggest pitfalls as well, where it hasn't been happening consistently. One of the other things about that is your savings there are €500 a month. You cannot be dipping into that. So pretend that's your mortgage repayment. It's gone to the bank. If you've been paying your mortgage, you can't say to the bank, I want to go on holidays. Can I have some of my monthly repayment back? So that's the way you need to look at your savings and your rent as well. It's gone. Don't touch it. Keep it going there for the 6 months. After that, then it really is looking at your accounts, how you manage your money. Now, it's not looking to see how many times you tapped your card for a cup of coffee, because I tell you, I wouldn't get a mortgage if that was the case. But it is looking at, what you're doing. Are you living beyond your means? Limit third-party transactions into your account, money from whether it be family, friends, whatever it is. Yeah, the odd amount going in, if you've been on a night out or something and you're sharing a bill, that's fine. But if you're getting third-party funds in, it looks like you're relying on somebody else to actually fund your lifestyle. The other thing is to make sure that, you're paying your bills and whatever it is, that there's no direct debits going bounced on your account, as in, if your phone bill is due out, there's enough money to meet it and everything like that. So it's just looking at the overall kind of scenario there of your account, how your lifestyle is, and making sure that there is the affordability in that going forward into the future for your mortgage. They are really three main things that the lenders look at, and it's scrutinizing those bank statements and stuff like that, to make sure that you can sustain this mortgage into the future. It's all about the bank assessing their risk. You've got strangers there in the background looking at all your bank statements, deciding if they're going to give you a couple of $100,000 to buy this house. So they want to make sure that everything looks perfect on paper there. But they still want to see that you're living. There's no point in you cutting down on spending, not doing anything, because at the end of the day, a mortgage is a lifetime commitment. You're probably going to have it for close to 35 years. And if you're not spending and living normally now, that's all going to change then when you have your mortgage. So it's a bigger risk then at that point, So prepare in advance. Contact us here at IMC in advance to have a chat through it. It doesn't matter if you're 6 months away from it, 12 months away from it, whatever. Contact us and let us put a plan in place. We're here for you for a long time, not just, to get that mortgage over the line at the very last minute. What would you think here on your own side?
I would absolutely reiterate that fact of being prepared and kind of getting on the jump at a very early stage. You'd really want to be in the process of reaching out to yourselves at IMC prior to even searching for your dream home, so you have a good idea of what's expected and what you can kind of put in place. That is certainly the big deciding factor, and that really kind of lands people their dream homes down the line. And certainly reaching out to ourselves as your solicitor earlier on in the process will make it a whole lot easier. You'll get good guidance from both ourselves and IMC at the very early stages of the process, and it will alleviate a lot of that stress. You're not constantly asking the questions to yourself or online Googling. You'll have people on hand who are there and available and ready to answer your questions, and 100% just getting it in there at an early stage. I think that would really ease the pressure on people and when they're proceeding.
Definitely. And it's good to have like your solicitor chosen. It's good to reach out to yourselves there and have the chat and know what's going to be expected and timelines and all that kind of stuff. So yeah, definitely.
And it can be a long process, so you'll build a relationship with your case manager or whoever you're dealing with at IMC or Jacob Law. You'll build it up over a number of months. You'll kind of get closer and closer with them. It can be often a long process. For some clients, they're in the process for 9 months almost, and in other cases it's 3 months, but you won't know until you actually make that decision and book the property. But it's definitely worthwhile building those relationships earlier on. It'll ease your mind and just make the whole process a lot smoother and a lot easier. Yeah, absolutely.
Grant. So I suppose when we're talking about what preparations to make, transparency and clarity is key, both in terms of what your accounts look like, but also in terms of what information I suppose you're getting. And I suppose when it comes to stepping on the property ladder, the accessibility is quite important. And I suppose accessibility has been made significantly easier for first-time buyers through the introduction of multiple schemes. And Michelle, I might turn to you again here just to give us a breakdown of what schemes are available for first-time buyers in the market. And I suppose maybe just a wee bit about the criteria around that and then what to really be looking out for.
Yeah, absolutely. So look, I suppose before I say this, I just want to say first time buyers doesn't mean that you have to be buying a newly built home, okay? However, the schemes I'm about to talk about are only for newly built properties, okay? And we look after plenty of first time buyers who are buying second-hand properties, so there's no issue with that either. But these schemes are specifically for newly built properties, buying them directly from the developers, etc. Okay. So the first one here that you have is the Help to Buy scheme. Like this is a brilliant one. It can give you up to 30,000 towards your deposit on that property. And the property value must be under 500,000 or under, 500,000 or under, okay? So 30,000 there. It is a refund of your taxes over the last kind of 4 years, okay? I always say to clients, even if you're not thinking about a newly built property, go and see how much you actually qualify for with the Help to Buy, because it could actually be the deciding factor then that you're saying, okay, we don't have enough of a deposit built up from our own savings at the moment. Do you know what? We will start looking at new built properties and we will get our refund of 30,000, okay? Not all clients will qualify for the full 30,000. 30,000, as I said, it is a refund of the taxes over the last 4 years, but it is always a good idea to check out how much you do qualify for. The next scheme then, which is proven really, really popular as well at the moment, okay? So that is the first home scheme, okay? So the first home scheme is designed to bridge the gap between your 10% deposit, your maximum mortgage approval, and the purchase price of the property, okay? Now, the purchase price of the property varies from county to county, okay? Here in Dublin, it's capped at 500,000, okay? It does vary in the other counties across the country. And if you Google the first home scheme or contact us, we can clarify those limits there with you, okay? But it can give you up to 30% of that purchase price so that you can afford to buy the house, okay? So we'll just say, for argument's sake, you find the house, it's 500,000, okay? Your maximum mortgage there is 350,000. That's what you qualify for, okay? You have to bring a 10% deposit to the table yourself, okay? So 50,000 is what you have to bring. That could be your 30,000 from the Help to Buy, and it could be another 20,000 that you've saved up to yourself. So that's your 50,000. So we're now down to 450 of that purchase price, okay? You've got your 350 mortgage and you still need 100 grand. That's where the first home scheme can step in there and you can use that towards buying that property, okay? So you can get on the property ladder. Not free money. For the first 5 years, there's no service charge on it. But then from year 6 onwards, there is a service charge, okay? That service charge starts off at 1.75% and it stays like that up to year 15, okay? And then after that, it increases. You can buy the first home scheme out of your property at any stage, okay? And there's rules and regulations behind that, as into how much it would be and that, but you can certainly buy them out. And then you would have full share of your property. There would be no equity stake in your property at all. But it's proven really, really popular at the moment, given the way house prices are going. The third scheme then is the affordable housing scheme. So this is more so based on the different county councils, okay? So there will be certain estates that have affordable housing scheme purchases in it. So basically you would apply to that particular council, whether it's Kildare County Council, wherever it is. I'm saying Kildare because that's where I'm from. So you would apply to them for those particular schemes. You still need your standard mortgage approval, but the difference is that you get the contract price of that purchase is at a reduced contract price based on your affordability and everything. You still have to have a 10% deposit, and you can use the Help to Buy scheme as well, up to that 30,000 as part of that 10% deposit for these affordable housing schemes. So you could have a property there that's, we'll say the 500,000 again, and potentially that council are willing to sell it to you at a contract price of 400,000, okay? So you're using your maximum mortgage again, which you'll get an approval from through the likes of ourselves, okay? And your deposit then as well will go on top of that. So really great schemes, applicable to newly built properties, but they are really, really good schemes that are out there.
They certainly are. They're actually a great help to many of our clients. As both myself, I work in the new builds department at Jacob Law, so it is a day-to-day occurrence. We're dealing with these schemes every day. the Help to Buy scheme is great. Look, the 30,000 towards your 10% deposit when signing contracts is a great help. You know, it's hugely beneficial to clients. In terms of how we process those Help to Buy applications and schemes, well, the client processes the application, and then they provide an application code and an access code to ourselves. It's a little bit of a work in progress in terms of finalizing the claim. You know, we'll review your contracts, we'll go through your contracts first and then sign them as well. We need to have your signed mortgage letter of offer. Again, reiterating the importance of being prepared on getting your mortgage letter of offer prior to booking the property, because the developer or the vendor solicitor will look to claim that Help to Buy at a very early stage once you've signed your contracts. So again, highlighting the importance of being prepared there. In terms of the first home scheme, yeah, you'll make the application to the first home scheme, you'll receive your eligibility certificate. First of all, you provide that to both ourselves and IMC. The next step then would be, once you have your mortgage letter of offer, you'll provide that to the first home scheme. They'll review it, they'll issue the first home scheme agreement and the accompanying documents to ourselves. We'll review them then with our clients in detail, mostly over a video call. We'll sign those documents and return them to the first home scheme. Again, it's important to be prepared and keep in mind that you are using the first home scheme. It can almost be pushed to the side in some cases. You know, clients will focus on their mortgage application and then it will just be a last minute thing. But it is, again, important to action that application there with the first home scheme, which is great. You know, it's definitely a good help to clients. On the affordable home scheme, it is aimed at helping buyers purchase the new homes at a reduced price. So it is an equity percentage, but it's a little bit different to the way the first home scheme and the Help to Buy schemes are actioned. You know, we'll do a claim stage on the Help to Buy, and then again, we'll submit a drawdown request for your first home scheme funds, which in the case of the affordable home scheme, it's a bit different. You know, it is a reduction in the purchase price. There is an affordable home scheme agreement issued by the local authority, which we would again review as well with our clients at a different stage. So with the affordable home scheme, it is a little bit different, but again, all three schemes are hugely beneficial to clients, and they are certainly well worth taking a look at.
It's good actually to hear, you know, how they all kind of work in the background. I suppose we do the approval process and everything, and we use all these schemes towards actually, you know, the clients buying their home, but you know, knowing the kind of the claiming of it in the background, we're not involved in that. So and you know, I suppose that's a fact there of having a solicitor's firm like Jacob Law, who are used to doing this day in, day out all the time, is so important. You know,
for us, you know, it would be a cool breeze, but if it's your first property that you're purchasing, it's one of the biggest financial decisions that most people will make. You know, having a solicitor who's well in depth and deals with these things on a daily basis is hugely important, and it's hugely beneficial. You know, what I reiterate to my team would be that we're here to ease the pressure on clients and to make this process easier. You know, it's easy for us, we're dealing with it every day, but you know, it can be a very daunting process. So again, reiterating the fact, getting in touch with ourselves and IMC will make it a hugely easier process, and it'll make it very much so straightforward.
I suppose, there's a lot of information there, and I suppose if I'm looking back to just under 2 years ago, and I bought my first house, I found myself constantly worrying, am I doing the right thing? You know, am I following the rule book? Is there, you know, every step am I making here? Am I helping myself? Am I hurting my application? I suppose this is my time before IMC, and I suppose I went direct to lender, so I didn't necessarily do myself a service there. But I mean, look, I think if I went to a broker, it probably would have been that little bit easier, and there would have been a lot more support in the back end. But I suppose, what are some of the common hurdles I suppose a lot of first-time buyers might face, just especially with their applications, whether it slows it down or harms it? What are some of those hurdles?
I suppose we'll touch on some of the kind of bigger ones. Like a lot of the time, you know, clients will get their contracts and they'll think, oh, perfect, we can go ahead and sign the contract straight away and there's no need to worry. You'll find a lot of vendor solicitors will want to see sight of having your mortgage letter of offer in hand at the time of signing contracts. There is in some instances where they'll allow us to sign contracts without that formal loan offer in place. But again, you're under a time crunch there because they'll only, in most cases, allow an additional 4 weeks. So again, some things that will, and it is one of the biggest ones that will delay the process or cause delays and unnecessary stress, is not getting in touch and having your mortgage letter of offer in hand. And when you're reviewing the contracts, you know it's there, you have the peace of mind, you can proceed with confidence. You're making quite a large payment on your 10% deposit. And it can be a difficult decision to make if you know you're not 100% on where you're at with your mortgage letter of offer. So that is certainly one of the bigger ones. Additionally, then, you know, not having that letter of offer can cause delays in terms of the schemes and your application and draw down of scheme funds to Help to Buy. When we sign contracts, you know, those funds are usually requested by the vendor solicitor between 7 to 14 days of signing the contracts. You know, if you don't have your mortgage letter of offer there, we can't finalize the claim. You'll have your sales agent coming on to you going, hey, we need to finalize this and get this payment made, especially if you're using the full 30,000 towards your 10% deposit. And then again, you know, it's just one of those things. You'll find that people will be chasing, the solicitor will be chasing off, the sales agent is chasing the client, and it just causes a lot of stress there on that one.
Yeah, with the letter of offer there, Ciaran, you want to see us here now in IMC when that letter of offer is issued. It's like a sigh of relief.
Absolutely.
Finally, you know, because everybody is under pressure and the contracts need to be signed. And, you know, I suppose on our side, the hurdles there that we face trying to get a case to letter of offer. And, you know, we've gotten approval maybe, you know, up to 6 months beforehand, client finds their dream home. The lender will automatically reassess that client when we go back in to look for that letter of offer. And that's something that clients do forget about. You know, you are constantly assessed at each step of the mortgage process, okay? So like I said there earlier, doing your rent, doing your savings, all that kind of stuff. We have cases where a client, they get their approval and they will stop doing their savings then because they think they're home and dry. They have their deposit, they have their approval, but they don't find the house for a good few months. And the lender then says, well, you've stopped showing that repayment ability, so we're not willing to progress you to letter of offer until you show us that for another 6 months. That's a hard conversation with a client, and it's a conversation we don't like to have, because it's literally them handing over their dream home at that stage, you know. So we try and stay in contact with our clients all through that beginning process, you know, through the approval. Basically what I say to my clients is, we will hold your hand the whole way through. We will tell you what to be doing all the time. You don't need to be thinking, what do I have to do next? We will be telling you what you need to do next. The only thing we can't do is find the property for you. That's literally it, you know. But yeah, it's keeping those good habits up on our side that we say.
Definitely. And I suppose with clients that are working with IMC and Jacob Law, your broker and Jacob Law will communicate with each other and will work away in the background to keep things moving along a little bit smoother. There may be items that pop up with delays, and, you know, they may have already been dealt with, you know, and it just keeps things moving along. And that constant peace of mind is something that you can't get away from, I suppose.
Yeah, no, definitely.
Absolutely.
And it is great. I know for us, having that communication there with yourselves in the background, so that we can look after our clients. We don't necessarily have to be going back to our clients all the time, asking them the questions. I can come directly to yourselves or whatever, you know. So it all helps. It's just to make the process smoother. That's all we're out to do.
It certainly is. And I mean, if you're in a position and you have your mortgage letter offer, you can sign your contracts with ease, you can move on and sign your loan documents then as well. And then it's just a matter of waiting until your property is ready for inspection. And you can sit there in that couple of months, whether you're waiting two months or 2 weeks, you know, you have the peace of mind, everything is in hand. You have your people that you've employed working away in the background, and it just alleviates a lot of that stress for clients.
And definitely. You can get excited.
You can get excited.
Keys,
you can enjoy the process. You can enjoy the process then as well. And that's the big thing for us. Absolutely.
As I'm just mindful of time here. So just really quickly, Ciaran, I might just ask you just to maybe summarize. I suppose for a lot of first-time buyers, you don't necessarily want any surprises on the journey, and especially close towards the end of it. So are there any additional costs that I suppose first-time buyers need to be aware of, so that when they're going through that journey, that they're not necessarily hit with a big surprise at the end?
Certainly. Look, our professional fee at Jacob Law is €1,300. The total cost then to clients, you know, including our professional fees, VAT, third-party outlays, and kind of registration costs, is fixed at €2,800 for properties up to about €400,000. It doesn't change but a lot now. Over properties priced over €400,000, there is a slight increase in registration fees from €875 to €975, which would only bring the cost to a total of €2,900. And that's across the board for both second-hand and new build properties. In cases for new build properties, more often than not, there is an additional fee of €75 for registering properties in a new folio. But again, it does kind of cap it out at 2,975. You can kind of take that. It is not going to be any more than that cost. It's a pretty standard set. Then for properties, priced over €1 million or €2 million, we would usually provide a separate quote altogether. So for clients that are in that kind of bracket and are looking to see what the fees would be, we price them at a separate quote altogether. So if there are any clients who are in that bracket, absolutely reach out to us for a quote and further details. But there's pretty much no additional hidden costs after that. It's pretty standard and straightforward there, and competitive as well.
It definitely is. Look, I've seen solicitors' bills come in, and they've come in a lot higher than those. And it's the one thing that we'd always say to our clients about Jacob Law, about this set flat fee, which is great. On kind of the mortgage side, it is important to note, like when you're going for your mortgage approval and all that, you do need to be able to prove to the lender that you have access to the funds to pay your fees and everything like that. So on that side, you're going to have obviously your legal fees there, as Ciaran said, about 2,829. You will also then have a valuation fee, potentially 2 valuation fees for a new build property, and one just for a second-hand property, we'll say, okay. Valuation fees max is about €220, okay. And then if you're looking at a second-hand property, you probably will want to get a structural survey done on that property. Now that varies from engineer to engineer. You could be looking at anywhere, from €600 up to £1,000 or something like that. Okay, so if you're in the second-hand space, you're making sure that you have enough there as well for your structural survey. And then 1% stamp duty of the purchase price as well. Okay, so if you're looking at a new build there of about 500 grand, you need to have about 8.5 grand extra for your fees and stuff like that. And just to bear that in mind as well as your 10% deposit.
And also something to consider on new build properties, when we come to that final stage, you will more than likely have to hire a professional snagger to snag the property at the end. So it's another cost to consider there. Mostly it's not going to be any more than €150, but it is certainly something to keep in mind in those final stages.
And just to clear up there as well, on the Irish Mortgage Corporation side, there is no fee for using our service at all, okay? So we get paid directly by the lenders for literally bringing the business to their door, and in turn, we don't charge any fee to our clients. So look, it's one less fee there.
Amazing. How could you not?
Exactly.
Well, thanks, Mel, guys. Like I know we have a few questions here. Just I think it'd be good to address. I suppose just I know this is going to be a really quick answer, but I'll just throw it out to the guys. How early in advance would you recommend reaching out for advice around mortgages? I suppose if you're looking to buy within 12 months, is it worth getting support now?
Yes, 100%. Talk to us straight away. There may be certain things in your accounts that we'll look at and we'll say, look, you need to change that. Maybe you're not saving enough to prove your repayment ability or whatever it is. There's all sorts of stuff that we can point out in the beginning. And when people follow the plans that we give them, they have a successful mortgage application. There's no doubt at all. So as early as you're thinking about it, doesn't matter how early, we can have the conversation, we can diary out, touch base, which is 6 months later, another 6 months. We're here for the lifetime journey of that mortgage,
And the same with ourselves at Jacob Law, absolutely reach out at an earlier stage. We're more than happy to answer any questions. If it's a new build property you're looking to buy or a second-hand property, there's absolutely no harm in getting that information.
Yeah, and I suppose just we'll try and answer some of the anonymous questions coming in. Just again, so it's easier to. So in terms of auction properties, is there any advice on auction properties specifically?
I'm going to leave this one to Ciaran. Yeah.
Auction properties. Yes. That wasn't the question I expected. On auction properties, I think we will have to come back to that one. We'll have to do a little bit of a deeper delve and we'll answer that question.
I know with properties that go to auction, there's normally a very quick turnaround time expected on closing out on those properties. And potentially there is a loss of your full deposit and extras on it. So auction properties can end up being a little bit difficult if, you know, you're waiting on a letter of offer. Valuer has to go out. There's all these different type of time frames and everything for an auction property. A lot of cash buyers buy from auction more so than your standard mortgage approvals. That's not to say you can't do it. But yeah, it's certainly, they're very much on a case by case basis. So if there's a specific one, I would say reach out to us. But to that person there, we can try and get some more information over to you.
Yes, I definitely will reach out to ourselves. We'll certainly be more than happy to put a little bit more information on that one.
Didn't mean to land you in it there, Ciaran.
Again, I suppose one for the group is €500,000 the capping for the first home scheme as well, just because there are currently no new builds available in that price range. So that's just a question that's come in as well.
Yeah, so the first home scheme, it's not specifically 500,000, it's per county. So there's different limits in different counties, okay? Currently Dublin is sitting here at the 500,000 mark, okay? Some of the counties go all the way down to 375,000 as far as I'm aware. And they kind of go in those 25,000 amount slots kind of, okay? But you would be best just checking on the first home scheme site. You can check your eligibility as well on the first home scheme site and find out there and talk to us. Do you know what I mean? We'll always steer you in the right direction and get the answers for you.
Great. We might just answer one more because I realize we've gone just the 1 minute over. I suppose, what is the buy-to-let rate? So if this person was looking to buy a house but wasn't ready to move in for a bit, can they rent it out, or would that change the mortgage that they could get?
Okay, so you'd actually have to go for a buy-to-let mortgage if you're planning to rent the property out, okay? Buy-to-let rates tend to be typically 2% higher than your standard private dwelling home rates. So that's your home that you're buying for yourself, okay? They're typically 2% higher. Your deposit for a buy-to-let is always 30%, okay? So that it's not like your first home or anything like that where it's 10%. It is always 30% there, okay? So it's a very different kind of mortgage, okay? And it's based on rental income and all those sorts of things. Once again, that's a case-by-case basis to have a chat with one of us in relation to that. We've plenty of buy-to-let expertise here in INC, so yeah, we can certainly have a chat around that.
Great. Yeah, just because we've gone over, we might call it there. I know there's a few questions there left unanswered, but look,
I've seen one I'm just going to answer there.
Okay.
It says, how soon do you need mortgage approval to apply for the Help to Buy? No, you don't. Go in and apply for the Help to Buy and see how much you qualify for, and have your application submitted. You don't have to have mortgage approval to apply for the Help to Buy, okay?
Great. Thanks. And look, for any other questions that are left unanswered, we'll reach out to you with answers. And again, just after we end this webinar, there will be a wee survey. If you can just answer that, that'll give us a wee bit more information in terms of how we can help you beyond this webinar. But again, thank you very much for giving us your time. I know some of you are on your lunch breaks, so hopefully you can go and enjoy the little bit of sunshine that we have here. But hopefully we get to chat to you soon. Take care.
Thanks, Mel. Bye.
Bye.